Today is Tuesday, July 5th. Welcome back to work after a long holiday weekend. I'm going to take a look at just what's going on in general in the market. Just to borrow from John Oliver's, just a quick recap of last week. We'll see where we are in relation to the Brexit and just a general trading range in the market. You can see up here is the pre-Brexit close. You can see what happened from there. This is the S&P ETF, the SPY. You can see it's gained back just about the whole thing since it fell. So that's a good thing, if you're a bull, that is. Let's take a look a little deeper into the sector to see what's going on. Take a look first at industrials. This is the SPDR sector ETF. This is the industrials. Looks pretty similar to the broader market. Energy looks pretty similar to the broad market. Utilities, of course, with interest rates continuing to fall, is soaring. All right, let's take a look at some other ones that look better than the market. I'm going to start with the consumer staples, as you might expect as well. So here's the Brexit close. Just soared through that mark last week. All right, another one that did very well is healthcare. It's past its pre-Brexit close. So that's also leading the market. So you have two defensive sectors, three if you throw in utilities, leading the market on the rebound. And look at the other side. Look at the financials. Not even close to getting back to where it was, and not even close to its previous high. So that's doing pretty poorly post-Brexit, even though it had a nice bounce. And also, look at this. This is the materials sector. I'll get rid of that. Materials sector did even worse. And this is kind of an odd thing because within the materials sector is gold. And just look at the gold ETF, gold miners ETF, and you can see that's just soaring. You know, here's the pre-Brexit close was down here, and look at that soaring. So the question is, what's going on here? If basic materials has gold and gold is soaring, what's going on? Well, the thing about basic materials is that it's really mostly chemicals. It's a very, very high percentage of the chemicals, and we can see in just the chemicals index. This is the S&P index, and you can see chemicals just getting crushed. Why chemicals? Well, it's very industrial sensitive. You got other things in there like steel and paper, which are also not doing well. So at the bottom of the economic food chain, you take gold out of the equation, these basic materials not doing well. So we have financials, we have basic materials really lagging the market, and we have healthcare, we have consumer staples, and we have utilities really leading the market, and that is not a bullish combination. So just to recap, we have the sectors that are traditionally defensive leading, sectors that are more aggressive, and we could look at, everyone thinks of tech when we put that in there as well, and you can see not quite back to the market, so it is lagging a little bit, but not quite as much as the others. So your more aggressive usual suspects in a bull market are not leading, and that leads me to the conclusion that things are not doing great. Market's now open for the day. Dow is down about 90 as we speak, just a few minutes into the session, and Europe is also not doing well. So there you have it. The market internals are speaking to us, even though that post-Brexit rally looked pretty nice and breadth was pretty good. Just overall, the performance, the amount these things are moving, is more in line with a bounce rather than a recovery into a new bull trend.